today, nobody sent subs. Everybody got like our prime time players for all of these organizations. They'll introduce themselves. They're all going to talk for about 10 minutes, and then feel free to ask questions. I think it's great that we have a smaller group tonight. I think that probably means that you're all a little bit farther along than maybe people who come to our other workshops. So if you have specific questions, I bet it relates to someone else who's here. Maybe just as a show of hands, who already owns a food business that's in operation? Who has like a specific idea that they're looking to launch? And then who's maybe even just like testing the waters? All right, with that, let's start with Amy.
Great. Thanks so much. So I'm Amy Ventura. I work in the Mayor's Office of Innovation. Our office does a lot of work to help connect our residents with resources. We have especially been working with the Rochester Monroe Anti-Poverty Initiative to find ways to help build wealth in our neighborhoods, especially some of our most stressed neighborhoods and with people living in poverty. And one of the best ways to help people build wealth for themselves, and also one of the more risky ones, which definitely understand, is entrepreneurship. And so one of the programs that I've been working on since about January 2016 is the Kiva Rochester program. So Kiva itself is an international nonprofit organization. They provide 0% interest loans up to $10,000 to entrepreneurs, and these are typically for entrepreneurs who couldn't necessarily walk into a bank and get a loan. And there's a lot of reasons why someone can't just walk into a bank and get a loan. They could just be, it looks like a lot of you guys are thinking about your business, maybe you don't have investors yet, and you can't walk into a bank and get a $25,000 loan if you don't have your own assets to put up, if you don't have a great credit score or great credit history. So I have two videos, but I think I'm just going to do one. And it's just a video that was created by the Kiva organization, and it just talks a little bit about what the program is and how they're able to offer loans at 0% interest.
At Kiva.org, we love our nation's 25 million small business owners, artisans, farmers, and entrepreneurs. But oftentimes, you struggle to start or expand your business. A small injection of cash could make things that much easier, but it's hard to come by. That's where Kiva comes in. Kiva is a nonprofit organization that supports U.S. small business owners like you with interest-free capital. That capital doesn't come from an impersonal institution seeking a high rate of return. It comes from our community of 1 million individual people from all around the world and all around your neighborhood. And those people aren't just lenders. They can become customers and brand ambassadors for your business. Because like you, they want your business to succeed. As a U.S. small business owner, you can apply for a first-time Kiva loan up to $10,000 using our simple online application. To start out, we ask that you establish your character and trustworthiness by inviting your friends or family members to fund a small portion of your loan. Once you do that, Kiva's community of lenders will join in and support you. And unlike other crowdfunding platforms, over 90% of Kiva's U.S. borrowers reach their goal.
In addition to the obvious perks like the 0% interest, it was amazing to see lenders from all over the country and the world, contribute to our coffee shop.
Within weeks of receiving the Kiva loan, we were able to put the down payment down on the rental commercial kitchen, and we were able to start producing.
Over the next 1 to 3 years, you pay back your loan in monthly installments with no interest and no fees. If you're a small business owner or an aspiring one, we want to help you succeed. If you could benefit from a Kiva loan for your business, or you know someone who could, please visit us at kiva.org/borrow and join a global community making a positive impact in the neighborhoods of our nation.
Okay, maybe I will pull them out and do this like, is that cool? Because this video is specific to Rochester, so Zach is actually someone I had mentioned later in my presentation, but he's actually been here and participated on a panel as someone who took a business concept, which is his restaurant, and would really just our loan that we were able to connect him with was able to take this from a one-man shop to being able to open up a storefront and hire some staff and get things going. So I feel like this could be really relevant to you guys.
I kind of started from my mom's kitchen, an idea. We kind of created something that we wanted to bring to this neighborhood. We serve gourmet burgers, milkshakes, wings, quesadillas. We do a steak and shrimp sub. We do it all. As a kid, I wanted to be an athlete, but I have a natural ability to cook more than I actually can dunk or anything like that. So it just made sense to, pick this profession over anything. It still was a dream. It's a dream come true. People say all the time, you'll never work a day in your life if you like what you're doing. I like to cook, so it just made sense to actually go in that direction. And we were operating for a little over a year before I got the Kiva loan. When I originally started, it was just myself in here doing every function of the restaurant, which is very taxing to say the least. I didn't have the ability to hire anyone. I was working hard just to, keep the doors open from month to month. And with that loan from Kiva, I was able to hire good people, and with that, we were able to grow our business. So I'm very thankful for Kiva. Even if I got like a zero interest loan from a bank, I don't think I would have that same family feel that I do from Kiva. Knowing that you have hardships, they don't just look at you like a number. It's an actual family. It's a group of investors that are investing in your success. Without them, I don't really think I'd be in the position where I am right now. So very much thanks to them.
So Zach actually spoke at one of our workshops several months ago in November, I believe. And what's I think particularly interesting about his story is that he started as a home-based food business, underground doing catering. I think he did takeout out of his house, or out of his mom's kitchen.
Mm-hmm.
So that would be a story.
Exactly, and I think that's the story that we hear most from our food businesses is the humble beginnings in a basement, or just dreaming about having a commercial kitchen available to you. So just a quick recap. So Kiva provides 0% interest, no fee loans up to $10,000. And this is great for aspiring entrepreneurs, which it sounds like a lot of you guys are, who have a concrete business idea and a concrete idea for how a loan could support, getting a business off the ground. But it's also great for businesses that are already in operation and need some capital to expand, maybe take their business to the next level. They mentioned in the first video that the loans are crowdfunded by Kiva's community of 1 million lenders. It's actually 2 million lenders now. In just a couple years, that number has doubled. And what that means is that your loan, instead of coming from a bank, comes from people from all over the world. So our $10,000 loans are funded $25 at a time by about 200 people or so. And so that's how they're able to make the loan 0% interest, because as a lender, it's sort of like the intersection of philanthropy and investing, because people are on the Kiva website looking to find businesses that they connect with and that they want to support, help them make their dreams a reality. And by distributing that $10,000 risk over 200 people, if something happens, the business owner can't pay back, that's 200 people who are out $25, not a bank who's out $10,000. So that's kind of how it works. They mentioned also the non-traditional underwriting process, which I could go a lot into, but I think that's something best to be discussed if you come to our office hours or something. But really, like I said, this is meant to fill a gap between a person who has a business idea but can't walk into a bank. It's meant to be the first rung of the capital ladder for business owners and aspiring entrepreneurs. And there's a lot of other ways that you can test someone's creditworthiness, and Kiva has it down pat. So I'd be happy to talk about that. Either through Q&A or afterwards. So since we launched about 2 years ago, we've funded 66 loans for over $330,000, which is awesome. And I think a key stat here is that the loans are an average size of $5,000. And for a lot of people I know, $5,000 is not going to do much. But for those 66 people that we've worked with, that loan has taken them to the next level. It's been the difference between, you know, the business operation and renting out the commercial kitchen. So what do people use their loans for? We always tell people when they're talking to us and they have an idea that you should have an idea for a loan that's going to be very impactful to your business or your business idea. So it's going to either help you reduce your expenses or increase your revenue in one way or another. So the first picture here is Joy. She owns the Coffee Connection. Are you guys familiar with that coffee shop? There's one on South Ave, there's one on Main Street. She used a $10,000 loan to buy a coffee roaster, and she got her wholesale business up and running. Assad here, he's at the public market. Maybe you guys have seen him. He actually used his loan to move into the winter shed and furnish a permanent space there, which is awesome. So check it out on Saturday. And then Kiana, she owns, she does clothing designs. She used her loan to purchase a ton of bulk supplies so that she wasn't going to the fabric store and buying a couple yards at a time. That really helped her decrease her expenses. So we have supported a ton of food businesses. We've supported a ton of really interesting businesses, but probably our food businesses are about 25% of the loans that we've done. So we've got, I just put a couple of them up here because they've all got great stories and maybe you recognize some of them, but Elaine, she literally calls herself the coffee lady. She's at the public market. Maybe you recognize Renee and Tony from Fuego Coffee. James from James Brown's Place, using our loan to totally, I think, blast out the walls in his restaurant to make it bigger. Saak I mentioned, and Assad I mentioned as well. So one of the cool things about Kiva, besides 0% interest loans and all that, is in being based out of the city, we kind of have the responsibility to make sure that business owners are successful now, successful 5 years from now, in whatever way that we can. And when I was designing the program, I found it extremely important to make sure that this wasn't just a product that was offered to our business owners, but that it was part of a much larger ecosystem for entrepreneurs. So I've worked with all of these wonderful people here. We've referred our business owners to them for support, for additional capital, and making sure that when people come to us, they are part of our program. We are able to help them before they get a loan, while they're working on their loan. I've sent a million people to John for business plan help. And even if they don't get loans, people come to us and we say, maybe this isn't the right time for you, but work on your business plan. Go to our partners at Volunteer Legal Services Project and set up an LLC, get yourself insured properly. That's what we're here to do, and that is really crucial to how we operate and what our values are. So that's kind of it for me, but this is the important stuff about how you can find us. We're always available via email. Our Facebook page is always up to date. You can always see who's fundraising. You can see where we're going to be. We're always posting events such as this that entrepreneurs might be interested in attending. And in the name of accessibility, we hold office hours at the Central Library every Wednesday from 3 to 6. And you can just drop in and say, I have no idea what Kiva is, but I heard about it. You can say, I'm almost done with the application, what do you think? We are here to help you. So I hope that we can help some of you guys in the future, and I can't wait to hear from you. All right,
Something I'd like to add on to that, so for the food businesses that she went into a little more detail about what they funded, my understanding is that, and not that all of you have to be interested in housing your business at the commissary, but there are still options beyond equipment and things like that. That didn't stop use it for marketing.
Yes,
something like that.
marketing,
So even if you're in the
hiring.
commissary and you don't need to buy equipment, there are certain things
Yes.
that fall within the acceptable Kiva.
Yeah, absolutely. I think the biggest rule of thumb is whatever I'm proposing going to really impact me one way or another. And that could be a lot of different things. What we don't look for is people who just need a little stockpile of cash or something like that. So.
We all need a little stockpile.
Yeah, I know.
It's not crowdfunding.
Thank you, Laura.
So my name is John McDermott, and I'm from the Venture Jobs Foundation, and we are an organization that's a local nonprofit organization to finance small businesses in the area, particularly in low-income neighborhoods, to create jobs. And we got our start really around the time of the recession, when we saw a real downturn in business lending in the community. And even after, as we came out of the recession, there wasn't a return to prior levels of commercial lending. So it is harder for people to get business loans in the area of Rochester these days. So we wanted to contribute to that. And one of the things that Amy talked about was the ecosystem for entrepreneurs in the area. And there are three types of capital that you need as a business owner to be successful in your business. You need financial capital, of course, and we're all involved in talking with you about that kind of capital. But then there's also the stuff we take for granted, which is the social capital, your connections with people in the area, knowing how the rules work. How do you make the system work for you? And then there's also the technical capital that you bring with you into your job, knowing how to cook, all the technical skills around how to run a business and all the related elements of that. And if you grow up on Main Street, you have a whole series of resources that are available in the community to you to make your business flourish. There's the Chamber of Commerce, and there are banks and other things like this. And so I kind of sketched out some of those of what we have here in the Rochester area. But if you're from North Clinton neighborhood, it may look quite a bit different because you may not have access to all of those things. And so we're interested as an organization in working in that other ecosystem and helping to strengthen that ecosystem across the city. So whether you come from Main Street or you come from North Clinton, there are people here in the room who are interested in helping you succeed as entrepreneurs. I want to talk about two programs in particular with you very briefly that we have as the Venture Jobs Foundation. The first is a financing program. We were funded primarily by the City of Rochester along with some area banks. And we have a loan fund for you if you've been up and running at least for a year, if your business is located in the city, and if the loan will lead to the creation of at least one new job. So if you're interested in that, I'm very interested in talking with you after the program, and I've got some literature on that. The loans are available between $10,000 and $50,000 at a subsidized rate of interest of 5% repayable up to 4 or 5 years. And so we'd be very happy to work with you on that. So that's one of our programs. The other, and that's available to businesses that are located in low and moderate income neighborhoods across the city. Basically, about 3/4 of the city, anything that's in red on the map. Our second program, and I want to talk about, let me come back to this. Our second program is called the Jobs Kitchen, which is a business accelerator, and we meet actually in this room on Thursday nights. In fact, we were supposed to be meeting tonight, but we're somewhere else this evening to give space for this workshop tonight.
Which explains why someone walked in and
And they were confused.
I said, are you here for the kitchen workshop? And
Yeah.
she's like, yeah, I am. And then,
So we have a program, if you have a business concept that you want to work on the strategy for, you can come and work with us on your business strategy. We spend 9 weeks working on something that we call the Business Model Canvas, and it's a program from co-starters. And we work you through who is your customer, what's your target customer look like, what's the value proposition of your business, and so forth. And so after the 9 weeks on Thursday nights, you have a much better sense of how you're going to take your business to the next level. And you've had time, we encourage you to talk with your customers and test out your value proposition with them. So that's kind of it in brief. I also want to talk about one other thing here, and that is, what does the financing ecosystem in Rochester look like specifically for you? You're all interested in starting food businesses, and at some point you're going to need financing. Where should you go to get it? And all of us at this table are interested in working with you, sometimes alone and sometimes together, because oftentimes we will collaborate together on financing deals. And if you look at this chart here, you'll see the different sizes of loan amounts. So you may be at the low end of the chart, or you may be at the high end of the chart, and that may determine where you decide to go for your loan or your financing. And then on the on the vertical axis, you have the amount of risk tolerance that the lender is willing to take. And some people are willing to take more risk with you than others. So if you have, let's say you go to Kiva, they have a very high tolerance for risk. They don't look so much at your credit score, you don't have to submit your tax returns or your income statement. They have a different model altogether, and it's a fantastic program. And if you have not gone to Kiva yet, or you haven't considered Kiva yet for financing for your business, I strongly encourage you to take advantage of it. Who would turn away free money, right? 0% interest, 0 fees. It's a fantastic program. I'm also a score mentor, and I've probably helped about 8 or 10 people so far to get Kiva loans. I think it's a fantastic program. Commercial banks tend to be more buttoned up, if you don't mind my saying that, really. And so you probably have to jump through more hoops. They're a little bit less risk tolerance. Commercial banks today have probably historic lows in terms of loan write-offs. Bad debts are probably at historic lows in terms of a percent. Would you agree with that?
Yeah.
So the whole commercial banking system, because of various reasons, tend to be a little bit tougher on loan applications, and they're willing to take less risk. Credit unions are a little bit more willing. Monique's bank, andESL, is a credit union, and they're probably one of the best business lenders in the city of Rochester. Are you still the largest?
Yep, largest and number 1 SBA.
Number 1. Okay, so you got the right guys at the table tonight. And so they're a little bit more risk tolerant than some of the other banks. Then a little bit more risk tolerant, you have people like Hubert at Pathstone and myself. We're both nonprofit lenders. We would be willing to take a little bit more risk, fewer hoops to jump through. But our loan sizes would vary a little bit. So we do loans from the range of $10,000 to $50,000 at this time. We don't yet have a larger loan package. Hubert's average loan size is a little bit larger than ours. But you do have quite a wide spread, and I'm sure you can talk about that. So, so this is kind of the landscape. And then there are people who finance their business with credit card debt and online lenders and payday lenders and that sort of stuff. And they're going to pay significantly higher rates of interest, but they may have higher risk associated with it. Are there any questions on this chart? That gives you, I hope, a sense of the different options that you have available to you as borrowers. That kind of wraps it up in terms of what I wanted to cover. But I do want to encourage you to not just think about one lender alone. It could be that as you're starting your business, you need, let's say, $100,000 to get your business up and running. And don't be afraid to think about a package of loans. Start with Kiva. Get your first $10,000 with Kiva, or as much as you can from Kiva, because the terms are so attractive. Then come and talk to us for the next tranche of your money. And then we put together a package with the Pathstone or ESL or some others in order to finance the balance. that may be a little bit more expensive for you. So that on average, the total cost of your money for your financing project is affordable. Just one thought to keep in mind. Okay, thanks.
Hi, everybody. I'll be brief. I'm Monique Evans with ESL Federal Credit Union. For ESL, I work for a commercial bank. I'm also on Hubert's board of directors for the Pathstone Enterprise Center. So I've seen the good, the bad, and the ugly with restaurants over a decade, over almost 20 years in banking. So I've seen stuff that happens. A little about ESL. ESL is one of the largest credit unions in New York State. I think we're #1 in New York State, top 20 in the country. So while we're a credit union and we live local, we have the capabilities to do deals that are as low as $5,000 up to multi-million dollars. So we run the gamut in terms of what we do. We are very committed to the Rochester community in our 7-county area because that is where we operate. So we want to make sure that Rochester is successful. One of the things I want to touch on just briefly during my quick 10 minutes are just some of the things you should think about when you're looking at doing restaurants. They're risky businesses. You probably will hear that from regardless of where you go or what you do. 60% of restaurants fail within the first year, so I always tell anyone that's doing something in the food business that if you get past that first year, you should be doing cartwheels and jumps because you're halfway there in terms of becoming a successful business. The other thing I would tell you that as a food business, restaurant, food truck, whatever you're going to be is don't run out of steam before you get started. I think what I've seen, this is from personal experience, what I've seen with restaurants, food businesses is that they ask for less or get less up front, and then they realize they need other things, and then they can't get it, and then it becomes a self-fulfilling prophecy that they can't improve on what it is they wanted to do because they didn't apply for what they needed at the time. But the restaurant isn't doing as well as it should, so the numbers don't look as good. So when they go back to the financial institution or wherever they go, they aren't able to catch up. And I've seen that serving on Pathstone Enterprise Center board, and I've seen that just from working in the financial services. So you don't want to lose steam before you get started, and you really want to think about what you need in terms of funding. I am as someone that works in financial services and as ESL being the #1 SBA lender, I'm a big fan of the SBA. I think that the SBA is a great way to leverage newer businesses that are just starting. So if you're a business, someone that has never been in business before, the SBA is a great way for credit unions and traditional financial institutions to use that as a tool to help get you started. And if you don't know how the SBA starts, what that means is that there's an SBA guarantee. So the bank is willing to take more of a risk because they know that in the unlikely event that a business does not do well, they can be covered on at least half of their loan or whatever the percentage is that the SBA is going to cover. So that is something that you should all familiarize yourself with as an alternative, as an option. The other thing that I would say too is that Venture Jobs Foundation kind of mentioned this, is kind of putting the pieces together. Sometimes you go to a bank and they'll say, I'll give you, you may need $60,000, and they say, okay, I may give you $40,000. So you may have to go find the other 20. You might be able to go to Kiva and get 5. You might be able to go to Pathstone and get the other amount. So try to find ways to do that. If you do that with ESL, we just ask that we're in the first position, which is no problem. But so that's something to remember. The other thing I just want to tell you, just a couple other quick tips that I've seen just with restaurants is have a business plan. I mean, if you don't have a business plan, even if you are not ready to go borrow, you should have a business plan. I mean, if I talk to you in the elevator, I should be able to say, okay, what are your growth projections? Where do you see yourself in 3 to 5 years? What's your first year projections? How much are you going to bring in the first year? You should be able to know that stuff like the back of your hand. There are so many resources in the community that you can use to do that. From SCORE to here to Venture Jobs, there's so many places you can go to specialize in that. The other thing is get a mentor. A lot of people who I've talked to in restaurant businesses, they act like what they're doing is like a secret, so they don't want to tell anyone. It's like, get over it. You need someone that can kind of tell you if you're crazy, and that can be there to support you. 9 times out of 10, if you have a secret sauce or something that you're doing, no one's going to be able to steal it because you're that person that's doing it. So don't be afraid to talk to a trusted advisor that can help you be able to do that. Understand your financial documents that you're going to need, of things that you're going to be able to do. Know your credit history. Because for Kiva, that's a smaller loan. You know, up to $5,000, credit may not be that big of a factor. But if you're going to start getting larger loans, Credit is still a major factor. You know, the lowest you can go is like 350, the highest you can go is like 850. You should know your credit score. You can get your credit report from at least once a year for free from all of the 3 bureaus. So you want to make sure you know your credit history. I always tell people the first date with my wife, I asked her what her credit score was. She thought I was crazy. People still tell that story. I was kidding, but. And the other thing is make a list of preferred banks. You want to make sure that you're treated with respect. Even if you're not walking into a place with $1 million, you want to talk to at least three lenders. I mean, I think ESL is a place that will treat you with respect, but don't take my word for it. You want to talk to other financial institutions. You want to talk to other alternative lenders because you want to make sure that you have a jive or a good relationship with whoever it is that you're doing business with. I mean, you don't want to deal with someone who, number one, is not going to understand your business, and number two, is not going to treat you with respect. You are your business, and you deserve to have that respect. So you want to make sure that you are speaking to someone that's going to have your back, number one, and number two, take time to understand what it is that you're doing. So make sure that you're doing that. The other thing too is that I always tell people to I mentioned this kind of earlier is get a mentor, get someone that's been in the food business that can tell you what it is. At SCORE, which John is a member of ESL, we're a big supporter of SCORE. There are stories that I've heard over the years from SCORE where someone was getting ready to open up a restaurant, and SCORE has been able to pair them with somebody who has run a very successful restaurant or may have retired from the restaurant business, and they were able to help them find their blind spots of things that you may not think about. Like, oh, wait a minute, I gotta have this type of hood for this type of fire thing that's gonna cost this amount of money. Oh, I may need to change my projections to know that I'm gonna need this. Oh, wait a minute, I have to make sure that I have to have a health department license. I mean, just basic stuff that sometimes you may not think about. Having a mentor is very important. That's important, so I always tell people have a mentor, have a banker, have an insurance person. Mentor, banker, insurance person, accountant, and banker. Those are your team. You want to make sure that you're able to do that. And even if you're not, last thing I'll say before I sit down, even if you're not at the level you want to get at, prepare your plan as if you're going to get to that level. And when you do that, that will help with any financial, anywhere when you go financially. Because even if you go to Kiva, you're going to want to know, okay, who you are and what your plans are. Pathstone, DJF, wherever you go, you want to make sure you do that. So that's kind of good, bad, and ugly. I actually have a PowerPoint. It's like 22 pages, but I'm trying to get away from PowerPoints. Amazon and stop doing PowerPoints, I guess, in their meetings. So if you have questions, let me know. And if you want me to sit through a PowerPoint, you make an appointment with me and come to my office, and I'll go through each and every slide that you can think of. And I'll end it with this quote that this should be written in my high school, and basically it relates to business planning, which is planning in life in general. If you don't plan, then plan on failing. So it's very, very important that you plan whatever it is that you're doing. Okay? Thank you.
Hello, I'm Hubert Van Tall. I'm the president of Pathstone Enterprise Center, which is the economic development of Pathstone Corporation. Some of you may know Pathstone by its older name of Rural Opportunities. It started out as a rural opportunities organization, but when more of their business became urban than rural, they decided they better change their name. So for the last 10 years, we've been Pathstone. We are a community development financial institution. This is a nonprofit financial institution that is certified by the United States Treasury. We've been one since 1998, and in that role, we're a loan fund. We don't take deposits, we don't provide banking service like a credit union or a bank would, but we do provide loans. And many CDFIs focus on housing, but ours is almost exclusively focused on small business lending. So we've been doing that in the upstate New York region, from Buffalo to Syracuse. About 35% of our lending is actually in the city of Rochester. About 50% of it is in Monroe County. But we also have a fairly large lending operation in Puerto Rico, which that's a long history of how that started. That I was a sick puppy when I had $1 million worth of loans out in Puerto Rico when Hurricane Maria hit. Many of our borrowers have come back, and we've only had to charge off 2 of those so far, but it certainly set us back. So in our overall portfolio right now, we have about 200 loans. Average loan size will be a little over $40,000. We actually lend anywhere from $5 to $250,000, but the bulk of our lending is towards the lower end of that. We've had loan losses of about 3% for the last 3 or 4 years now. So that's because so much of our capital is borrowed capital. We tend to be more conservative. We would be a lot more conservative than Kiva would be. Maybe, I don't know if we're more conservative or about the same as Venture Jobs Fund, and maybe a little more relaxed than a bank or ESL might be. So we do term loans up to 84 months. 60 months is the most frequent time period that we will do loan for. Gap financing, machinery, equipment, inventory, leasehold improvements, working capital. That's the one probably difference from what we do and what banks do. We will lend to startups. About half of our portfolio is startups. We'll lend to people with credit names and with less than adequate collateral, I guess I will say. Our decision times for $30,000 loans and less are about 20 days now. More than that, it's more like 45 days because we go through a loan committee. And so that's from the time that you get a completed application to us. So we're a character lender. Credit and collateral aren't as important for us. And for that reason, we're a little slower than how you could get your loan funded elsewhere. The things that are stoppers for us are tax liens, outstanding student loan debt, unpaid child support, unsatisfied collections, and judgments. So when we pull your credit report and see those things, we need to know that there's a payment plan for getting rid of those things in place and that you have them implemented it for some time. And we're looking for realistic cash flow projections that provide you at least a 100% debt service coverage ratio. The better your credit collateral are, the lower we will go in terms of debt service coverage. The worse your credit collateral are, the higher we will go. We take personal guarantees, other guarantees. We do a UCC filing on all business assets and liens on equipment and real estate. We do lend to restaurants and food trucks, but we try to keep restaurants to about right around 15% of our overall portfolio. Over half of the loan dollars that we've charged off in the last 4 years have been restaurants. So the point that Monique made about restaurants being a risky business, we know all too well.
And just to be clear, when you say charged off, you mean unpaid loans?
They were loans that were more than 180 days past due, and we didn't think we were going to get paid back.
You seen a guy with a pipe to go collect.
No, we try not to do that. Because lenders are as strict as we are, there is an allure to other types of loan products, and Malik touched on that a little bit. But I don't have a problem with people going to alternative lenders, but if you do, make sure that you educate yourself on the front end. So credit card, small business credit cards, the what's in your wallet sort of guides. Those are useful if you have a plan out and you're going to use them for convenience. But the trap that people can get into, and I've seen it happen several times with people who were laid off from a job and decided, I'll start my business. They have great credit, easy to get credit cards, and they haven't planned out how much money they need, and gradually that credit card balance creeps up and up. And what happens with your credit score as the amount of credit that you use starts to creep up towards the available credit is your credit score goes down. And people can find themselves trapped and not able to get traditional credit if they're not careful with how they use credit cards. Online lenders. Now, I'm not talking about Kiva, but you probably heard some of them on deck, Prosper, Lending Club. Some of them are pretty good and give rates that are, not great, but for the kind of lending they're doing, they could be acceptable. But, and the allure of them is that the way they operate, they're able to give a decision very quickly and get your money very quickly because they have these big data abilities. They will often look into your bank accounts and not just your credit score. But the traps are that the interest rates aren't always what are advertised. Be very careful if you do this that you know if there are prepayment penalties, because you can get a loan in which you're going to be charged the interest no matter if you try to pay it off early or not. If you try to finance out, there are daily holds on your account with many of these lenders. So they're taking money out of your account every day. And there's sometimes, with the better ones, there's a standard hold ratio. That's could be a percentage of your credit card sales for the day. But some of them have variable hold rates. And the rate can change depending on whether you've violated some part of their requirements. So they consider you in default, and they can change the percentage that they start taking each day. And that really gets people in a bind if they're not prepared for that. If they start seeing a large amount of money being pulled out of their accounts every day. We had it happen with a restaurant. This is a Buffalo restaurant. The older generation was turning the business over to the younger generation, and the younger folks weren't quite as careful with credit. So we were reluctant initially to loan to them, but we lent them $20,000 and told them that from what we could see, they needed to get help with their expenses and bring their expenses under control. They went for about 8 months. They paid back during that time, but then they came back to us for another loan, and they had gotten in a little deeper. And we said, no, it doesn't look like you've taken our advice to get your expenses under control. And there's all sorts of things that happen with businesses that deal in cash. As a lender, you never know whether the uncle has a gambling problem and he's pulling a little cash out of the till, or what might be happening there. So we said no, and unbeknownst to us, even though our agreement with them said that they were not to get another loan without informing us, they went to an online lender. And that was one of those with a variable pull. And now, 2 weeks ago, they came back to us and asking us if we could possibly refinance that high-cost debt. And we can refinance high-cost debt, but if you have a prepayment penalty, it doesn't really do you good to get refinanced because you're stuck with paying the same amount over the same period of time. So the Office of the Comptroller of the Currency has just invited these kind of financial technology firms to apply for bank charters. And the state of New York is suing them to try to prevent that. But it could really be the Wild West out there with what the financial technology companies are starting to do. And so be very careful about it. In the restaurant business, you'll also have suppliers who will want to extend you credit. You know, to do the 10 days net, the 30 days net, 45 days net. And, you know, that works for some people, but you have to be careful that you don't rely on them solely, because if you get strung out and you start missing, they might pull back on their credit. And if they're your sole supplier, you can really get stuck. There's the point of sale financiers, the people who will give you credit based on your credit card sales. So they're not really lenders. That's how they get around usury laws. They're called factors actually. So they'll give you, say, a $20,000 loan in exchange for $25,000 worth of your credit card receivables over the next 12 months. And they'll pull that out daily. So if you know what you're doing, it may work for you. But be very careful that you've figured out all of that ahead of time. So I would say, emphasize what Monique said about getting to know a lender. If you don't think you're going to need to borrow anything for a year, it still is a wise move, I think, to go around, as Monique suggested, find several lenders who you want to get to know, tell them what your plans are, tell them you don't think you'll need money for a year, ask them what they need from you in order to get a loan, and develop that relationship ahead of time. Review your credit report annually, as Monique said, because errors do pop up, and if you don't correct them, it's going to affect your credit scores. Take all of those erroneous credit entries seriously and try to get them taken off your record. And then understand financial management, how realistic your cash flow projections are going forward. And I would say try to borrow in advance before you need the money. The hardest people that I have to listen to are the people who call and say, I need $30,000 by next week. I have to pay my staff. And, usually there's nothing we can do at that point. There's nothing any mainstream lender would do. So don't let yourself get back into a position where you don't have any choice but to try to get that desperate loan, because you'll go to the online lender and you'll live to regret it if you're not careful about reading all the fine print. When you get one of those online loans, you have to click on something to read the terms of your agreement, and I bet you all do that every time you do that online, and then you sign saying that you agree with the terms of the agreement. But if you don't understand them, you can find yourself in real trouble. That's what I have to say. Thank you.
All right, we have about half an hour for questions if we need it. Does anybody have any to kick off? Just to reiterate, if you have a question, other people probably have a question.
With Pathstone, is there interest connected to that?
Yes. Yes, our interest rates are between 7.5% and 9.5%, depending on the risk of the borrower. So we're in that upper end of the range. If you're able to get bank financing, do that. If you just need a small amount, go to Kiva. Venture Jobs has a foundation, has a lower rate as well for smaller amounts. But we are trying to be a self-sustainable fund over time. about 2/3 of our loan capital is borrowed, and we ourselves have borrowed it from someone 2 to 3%. So if you then lose 3%, you're quickly out of business if you're not having, a little more for yourself. So that's our model.
Thank you.
I have a question. So, knowing my own strengths, my decision has been made to look to purchase an existing restaurant that's currently operating. I've been to a broker to see what is available and out there, and we talked briefly about the SBA loan, and he mentioned that I would need about 10% down to get that loan. So the ballpark of cost I'm looking at is maybe between $300,000 and $500,000 restaurant. So I was in need of maybe, $20,000 to $30,000 for that 10% down. Do you have recommendations of where to get that money to put down the 10%?
From an SBA perspective, you gotta find somewhere to get it, because the
Okay.
SBA requires what they call an equity injection,
Okay,
which is basically your skin in the game. So they wanna make sure that you are invested in that business from the SBA perspective. So that means that you need to get
Privately
it from,
funded.
get it from
Okay.
somewhere from you,
gotcha.
or, somewhere to show that
Friends,
you.
fools, and family.
Yeah,
Principals and
yeah, so you need to get that,
Okay,
get that special. The thing I always tell people too, when you're buying a business from someone,
yes,
if you've had a business valuation done, or if they've done a business valuation, that is absolutely critical. You wanna make sure that you're not overpaying for the business
a
size.
business evaluation.
Business valuation,
Okay.
and if and they may have had one done,
Mhm,
they may not share it with you,
mhm.
but I mean, it could be good to ask for that,
Sure.
because, I mean, obviously, I'm gonna try to get the best dollar amount I can for my business. So
Right.
my business valuation that I have, and I've seen it, and they say
Yeah.
200,000,
Yeah.
and they say, give me 300,000 more.
Sure, sure.
So you may wanna make sure that they do that, or you may have to pay that cost up front yourself.
Okay,
But it's worth it in the long run, I believe, because you don't wanna overpay for a
Right.
business.
right,
The other thing too is that they should be sharing all of their books with you in terms
Okay.
of what they're doing in terms of money.
okay,
Because they should be agreeing to be completely transparent, because you're buying that business and you wanna know what's coming in, what's
Mhm.
going in, what expenses are, so you know what you're inheriting once you
sure,
get that business. So,
okay,
there's pros to obviously to buying an existing business, they gotta build a customer base and all
Right.
that good stuff.
right,
But at the same time, you wanna make sure that, it is what it says it is.
Yeah.
And
Yeah.
that you're paying a good price for it.
okay, thank you.
Someone back there had it.
Yeah, you mentioned leasehold improvements and real estate development, and we have, storefronts occasionally available, and, a restaurant is the most expensive build out you can possibly do to improve a space. So oftentimes, people, come in, there's no hood and ansel system, and, we're willing to contribute a certain amount towards an allowance on that, but certainly not 100%. And when they get quotes on the build us to do, they're pretty sticker shocked. So is that what you mean by leasehold improvements in terms of monies towards a build out?
Yeah, we will make that loan because we're careful about restaurants, and especially startup restaurants. It often doesn't work. Very seldom will we loan more than 50,000 on a startup, and once you start talking about significant leasehold improvements, that often is a big chunk of that or more. So it's, we more often done leasehold improvements for existing businesses that have a track record than the startups.
Leasehold improvements are extremely risky and I remember one of my first deals that went bad when I first started banking. The person did extensive leasehold improvements, and they ended up being in business probably for about 6 to 9 months. So it is something that's, I think, more easier for any lender to wrap their heads around if it's an existing business that's doing that. And I always just tell startups, if you're looking at doing a startup business, because you're already gonna have so many other expenses just in terms of getting your name out there and then all the other most basic things, you really should be trying to find a location that's already built to fit your specifications, or have a landlord that's willing to, on their end, if they're leasing to you, to do that. That might be a little harder, but it's definitely a risky proposition with newer businesses to do that. I mean, because think about it, if you're just doing leasehold improvements alone, that's $200,000. You're already in. You haven't maybe gotten any of the equipment that you might need yet. So you kind of have to have a little bit of a balancing act. But if it's $10,000, basic stuff, you may need a hood, you may need something like that. I think it's there, but it's about prioritizing. I think in terms of the cost that you want to have, as you relates to the restaurant.
I have the experience doing what you told us not to do, which is the business planning bit. But so moving forward, I've got stuff in the kitchen, so to speak. It's just the planning. I'm really good at I've got all the community, I've got the financing, just the planning on it.
So you
My
should
brain is
consider
good.
getting a mentor to help you with the planning. Either somebody from SCORE could help you, the SBTC is available.
Score, SP.
SCORE are a group of volunteer senior business people, men and women, who will spend time with you to help you prepare your business plan, and it's free.
Oh, okay, thanks.
And it's an adjunct of the SBA.
And the SBDC offices are Brockport and also down in Livingston County. So the Brockport SBDC has an office in MCC, right?
They have one in Brockport.
But don't they
So
have
St. Paul.
St. Paul, yeah,
South
SBDC,
Avenue.
yeah. And now I think they've actually may also have an office now because the downtown Brockport place moved to
REOC.
REOC.
which
So
has
I don't know if their
Yeah.
office is in REOC.
So right across from MLK Park,
Yeah.
very close to here.
Yeah, but in SCORE, you can get right on their website, do an appointment right through there. And the good thing with SCORE, and John knows because he's a mentor, they will pair you with somebody who might even have that experience with the restaurant industry. And I just can't stress. I mean, think about your life. You want a mentor, regardless of what you're doing. Are you going to be a firefighter? You want to talk to someone that was a firefighter. So if you want to be in the restaurant business, there are so many people out here that can tell you the good, the bad, and the ugly. And that can be good. And one of the things I see with a lot of restaurant folks is that people love the food part of it, but you have to understand that when you're starting a restaurant, you have to spend as much time working on your business as in your business. Because I have restaurant people that say, oh, I love the cooking part, I love doing the new recipes, but I hate doing the books. I'm like, well, you better either learn how to do it or find someone that can do it for you. Because that piece of the business is so important, especially if you're a bar or something, and then you get these guys from the state coming and they want to figure out how much alcohol you poured in the last 6 years, and they start auditing. I mean, it can be overwhelming. So that piece, that's why that mentor piece and also that business planning piece is so important. And that's the piece of working on your business. Because you're going to know how to work in it. You're probably a good cook, probably know how to do something. You might have some good marketing ideas. But working on your business is probably just as important as working in it. It's a pain, but kind of got to do it.
Hi. So I am not a restaurateur. I am a commercial real estate broker. So I specialize in buyer and tenant representation for small and medium-sized businesses. And I'm just curious, from a lending perspective, what's the biggest mistake that you folks find when it comes to small businesses and real estate? Is it that people usually spend too much on their leasehold improvements? Is it that they don't typically budget enough for rental costs? Is it that they sign on for too long of a term, being a small business? I'm just curious if there are any trends that you notice with that, just because I'd like to know for my clients.
My only comment would be a lot of people I work with underestimate how much money they're going to need for the project. I don't know if that's your experience. They typically they've got a very limited amount of cash to put into the business, and they've got limited borrowing limits, and so they try to cut corners, and then you don't have as nice a build out, and so business is suffering because of undercapitalization.
Yeah, I would say a lot of the businesses we see, which are about half of our businesses have been in operation for less than 3 years. And I think some people make the assumption that they need a physical space to operate their business out of to the public. Whereas I think in early stages, a lot of times you can start building up your business name and your brand by operating out of a house or like a shared kitchen space such as the commissary. I think people rush to find a space and get it going when there's so much you can do to prepare for that big leap.
I think that's why I'm so excited about the commissary, because I think that it will give people kind of like that incubator space before they're able to do that. Also, you know, all of us sometimes we all have egos. The one that says they don't have one is lying, you know. So sometimes there's something called delusions of grandeur, and I think a lot of businesses think that they're ready for this big grand space where they were fine in the 1,200 square foot space, and they think they need 5,000 square foot space now. It's like, are you really ready for that now? And that's why a mentor is so important. So they go and do that, and then their fixed costs start eating into their profits. And you know, in grocery stores and in restaurants, the margins are so thin. So if a lot of your expenses start becoming overhead, you know, I think that is can be a death knell for a business. So finding a suitable location that's also realistic, I think, is important. I think that's, as a broker, I think by asking a couple of questions to them, you might be able to help them have a sense of reality on what it is they're going to do. Because you can always build. It's easier to be small and then go up. It's harder to be big and then go back smaller, right? So I think that's very important to think of. You know, in the beginning I said don't run out of steam before you turn a profit, and that happens too. And Hubert mentioned it, not asking for enough in the beginning, and then there's a self-fulfilling prophecy.
It's the location, as you know, and I think anybody who drives around Rochester, you see places where restaurants pop up, go out of business, pop up, go out of business. So, you know, knowing your market is key if you are to the point where you know, want to buy something. But I agree with everybody else that, you know, starting out with leasing spaces makes a lot more sense for starting a business.
Another thing that I just throw out is that people, when they're working on the business plan and your forecasts and your projections, there are standard industry measures for the restaurant business that you could be mindful of. And the business library over on the 4th floor of the downtown library is a tremendous resource to go to. And they can help you, people from SCORE can help you to understand how much of your revenue should you be spending on rent, how much should you be spending on labor and food costs. There are standard measures for a successful restaurant that are, you know, that are indicators for the industry across the United States, and they can help you with your projections and your forecasting. And you should be working on those when you have an existing restaurant to say, how am I doing against these standards? Am I doing better or am I doing worse? And if I'm doing worse, why is that? And what can I do about it?
Yeah, that's why we host our office hours on the 4th floor of the library, because the librarians up there are so helpful. And I think it's one of Rochester's best kept secrets, which, like, how could we make that less of a secret? But I also, I think, just to add on a little bit, I think one of the great things about Rochester is there's so many organizations working together to help entrepreneurs in lots of different ways. And I've seen this like culture of like pop-ups or sort of like guest chef or like guest, I don't know, like dessert things at restaurants. And like Stacy K. Floral, I think, is partnered up with Scratch Bake Shop, and they each sell stuff from each other's shops. Like, there are lots of opportunities when you start going to events like this and start networking and saying, this is my product, this is what I want to do, how can we work together? And I feel like that culture is here, people trying to work together and support each other. So it's finding your networks and finding those organizations or social circles really that are into it as well.
I've got a question about assessing your market. And there are certain kinds of businesses, not necessarily food businesses, where there are probably pretty straightforward ways to do that. How much do you think, particularly for restaurants, bakers, maybe even caterers to some degree, how much of this is gut feel, and how and in what ways can a startup food business determine whether there's room in the local market for what they're talking about? I mean, location aside, location is critical, but the product itself for the kind of food business.
That's a really great question, Heidi. I think you've got to do your own market research. I've worked with a couple clients with Kim, and we've been focusing on that question with them because they're recent immigrants to this country from Iraq and Afghanistan, and they wanted to start food businesses that didn't have any capital. And so we started encouraging them to start baking and making samples and just testing the market to see what the response is. Go around to different bakeries and see what people react to. Take them to restaurants and sample. Give out free samples at the public market or other places that you can go. Do your market research and see what the response is to the product that you have to offer. That is really the best way. I mean, you can back up and try to do some other market research, and I've helped clients do that. You know, how many Caribbean or Puerto Rican restaurants are there in the city, and how many people there are, and that sort of thing, and where are the holes and the gaps in terms of locations. Yeah, you can do that, and again, the library can help with some of that. But I think also having a really superior product and getting out there and talking with your potential customers and doing as much sampling as you can among the target audience is really very, very important.
We would always look for whether a potential borrower knows who their competition is. And when loans come to our loan committee, they can be pretty ruthless about that. And if somebody doesn't know who their competition is and what their advantage might be against their competition, things can get a little ugly in a hurry. So it is important, I think, for people to know, who else is doing what you're doing, and are your prices comparative with theirs? All of those questions that you would do if you were trying to market. Some restaurants that fail, the price point is too high, and for the neighborhood, etc. All those things can really sink a business.
Just to agree, you have to know your customer, but you also have to know your competition. And somebody can oh, I'm unique, I don't have any competition. Yeah, right. Everyone has competition. That's like, oh, we're a credit union, we don't have any competition. No. Yeah, I know, I can tell you all the competitors, I can tell you what they're doing on a community perspective, I can tell you where they are, who they hired, how long they've been there. So I mean, you have to really know your. I think knowing your competition is critical, but also how you are also a differentiator from them. And this is what makes the difference, because we deliver, or I think knowing those things are critical.
We answered everybody. They're all ready to go out.
There you go. I just want to say, God bless you. My dream is the one day to be able to own a restaurant. I wish I could own a restaurant, but that is God bless anyone that owns a restaurant, because you deal with a multitude of issues. So it's really an admirable thing to do. I wish I had the guts to do it, but I've worked with somebody over the years. I know how hard it is, but it can be very rewarding.
And I think in this day and age, just how quickly people can suffer reputational damage with social media. So being very cognizant of that as well, that somebody has a bad experience in your restaurant, somebody gets, help you, gets food poisoning, it can tank a restaurant pretty quickly. So you have to be cognizant.
How about somebody who's never been there before but doesn't like you?
Yeah, that happens. Oh, yeah, I've heard that happen.
Yeah, I'm very sorry, I got up late, so, but I was very interested, somebody, I know sent me email this event. I was very interested in the community kitchen aspect of it. I guess
Well, I can speak to that. If we have any other questions for the panel, maybe we'll take one more, and then I can give a little overview of the commissary for everybody for a minute. Yeah. Any more questions? Yeah. Okay. So the commissary, it's a shared kitchen space that's going to be across the street, the Sibley building.